Before we get started, I want you guys to hit that like button. I want you to subscribe, and I want you to hit that notification bell so that when we put out more videos like this, you get notified. And if you have any comments, leave them below. I'll gladly answer them for you. Okay, so today's topic is GameStop. We need to talk about what's happening. This is an outrageous thing that's happening in the market right now. You're into the stock market. I'm not in the stock market. I understand how it works, but let's have you describe what's actually going down with GameStop really quick so we can kind of get like a little bit of a background scenario. People can understand, you know, the idea and concept of short selling if they don't actually understand, and why this is such like an issue for the hedge funds right now.
Okay. So essentially, I'm not a professional stock market investor by any means. I'm a retail investor. I've been doing it maybe 9 or 10 years. I enjoy the stock market. I find it fascinating. And I'm very fascinated with what's going on in the market right now, especially these last couple of days with GameStop. So essentially, I'm very fascinated with the stock market, especially what's been going on in these last couple of days with GameStop. So what's been happening is essentially, if you haven't been following, GameStop has increased something like 1,000% over the last couple of days. And this is all because it's all started with one individual that essentially realized about maybe a year to a year and a half ago.
Yeah, so let's actually bring that up really quick. So it was... what was it? It was actually Chewy.com founder Ryan Cohen reportedly buys GameStop shares. This was September 21, 2020. So that's the guy that you're talking about, that you're referring to. Yeah. Okay.
Yeah. And so what had happened was he was doing research into a variety of different stocks and realized that one in particular, there was more short sells on this stock than actual shares that were in existence. And this is the only stock in existence right now and in all of history that has ever happened. So for a little bit of context for any listeners that don't know what a short sell is essentially when you buy a stock normally, you buy it at $100 and you hope that it goes up. If you are buying a short sell of a stock, essentially what you're doing is that you are banking on that stock going down. And so because GameStop historically has owned, bought and sold pre-owned video games, and a lot of video games nowadays are just you buy and you download them directly off of the console. People throughout all of Wall Street realized this is a dying business. They all started shorting. The stock, and essentially 130% of all the shares that were in existence for GameStop were short sells. More than what was in existence. So they then built up a community around this idea basically on Reddit to try to capitalize on this opportunity, because they realized that if they just started flooding into the market and buying GameStop and that share price started skyrocketing, all of these hedge fund managers, et cetera, that were all borrowing money, banking on this stock dropping down, would then be like significantly in the hole with the skyrocketing share price. And they'd have to essentially be buying back in at higher prices in order to just cover their losses.
Yeah, and they have to do that. That's the key. And that's why a lot of these hedge funds are getting killed right now, because they actually have to buy again to cover their losses. And that's the key that I feel like is actually happening here, and that why these guys from that Reddit board are actually like legitimately fucking these guys hard, because they're forcing them to continuously buy it. And you saw an article the other day where a hedge fund had to take out a loan for $2.5 billion to cover the losses.
$2.5 billion. And there's hedge funds cumulatively now over the last, call it 2 weeks or so, have accumulated $19 billion in losses.
That's outrageous.
To date.
Yeah, $19 billion.
And we are Friday, January 29th at about 3 p.m., $19 billion in losses so far.
So let's see when this all started popping off. This started popping off probably GameStop agrees to 3 new directors. Whatever. Stock soars January 26, 92% to close at nearly $148. Then January 27th, stock closes just below $350. It's crazy.
And it reached as high as I think 460 or 470.
That was the day.
One point.
That was the day that we came in to work, right? And I was literally standing outside of your office, and we were talking about it. And you had mentioned that it opened at what, 260 or something like that?
About 260.
Is that right?
260, 270. I think it was 265.
And literally within how long? I was still standing in front of your office and didn't move.
We were having about a 5-minute long conversation, maybe 10 minutes, and it increased by about $100 a share.
It's insane. It's insane. So let's talk about why GameStop, now that everybody has kind of like a background of what's going on, very high level background. Let's talk about why the GameStop stock isn't ordinarily a stock that you would buy based off fundamentals.
Right.
Yeah.
So removing from GameStop, what would be the fundamentals of just a sound business that you'd want to be either running or investing into?
Are you asking me a question?
Yeah.
Oh, you have to be profitable. I would want to see some sort of history of being profitable. A certain amount of time, maybe something like 10 years or whatever of, profitability and or, some sort of success in the market. A viable idea, right? A viable actual business idea, and not only a viable business idea or concept or whatever, something that has longevity, that if the market's shifting as it currently is, right? We're talking about, retail places and retail getting killed right now. So they have to show some sort of, I guess, initiative to carry themselves through this type of barrier even that we're experiencing right now. So they have to show some sort of, I guess, plan for future growth at least. I would never want to be into a company that is like a dinosaur.
Right.
And that's typically, if I were to look at GameStop, like you mentioned earlier, they sell used games. There's literally no reason to have used games anymore. And they're brick and mortar. Like that rate there, like done.
Right.
Done. They're like Blockbuster.
They haven't turned a profit in about 4 years. They do offer a dividend, but their earnings are negative. And they have 5,700 stores approximately across
that's a lot of stores.
5,700 brick and mortar stores globally. Now, recently, like you mentioned, they did bring in 3 new directors that their plan was to transition more online and through e-commerce. But you can only transition so quickly. And yes, okay, you can be like an Amazon and go from just selling books to being a e-commerce platform for everything. But the transition of a business turning around does not happen overnight.
I agree with you. However, why the fuck did it take them so long? This is like the internet has not just come out. Okay. Like I've been in e-commerce for like, I started I started CanadianProtein.com like 12 years ago. Mm-hmm. Why is GameStop just bringing in 3 directors right now? And now they're making the transition to online. It's ridiculous. It's ridiculous. And even still, okay. So Dave was mentioning that, the launch of the second launch of the PS5. Okay, great. That's for what, a month? Mm-hmm. You know what I mean? Like, come on. Like, what are we talking about here? They're clearly not an innovative company. They don't have innovative people behind it. So I would never bank on that. However, obviously, when you have millions of people that are trying to literally fuck the institutions.
Right. Because people are buying. I think one thing to make clear for anyone that doesn't know much about the stock market and they're fascinated by what's going on with GameStop is that GameStop as a stock itself, based on the fundamentals of stock investing principles, is not a good investment.
No, it's actually awful.
It's an awful investment.
Yeah.
But what the surge of this price represents is a whole bunch of other things, which we'll get into a little bit deeper.
Yeah. Yeah, for sure. So, actually, we can get into it now. So why are people actually buying GameStop right now? So what is the actual reason? So obviously, it's pretty well known right now. I'm sure the majority of people that have looked into this realize that there's a board. What's the board called again? I can't even remember what the board's called again.
Wall Street Bets.
Yeah, Wall Street Bets. Yeah, r/Wall Street Bets. So obviously, that's getting an outrageous amount of attention. Dave, you mentioned that one night you were looking at the user base inside that board or the membership in the board, and what was like 2 million. And then the next day you looked at it and it had doubled to like 4.6 million. That's insane. So
obviously it's this board that is literally pushing this stock.
Right. And there's a few people, few members in particular on Wall Street Bets board that is really pushing this agenda.
Yeah. And you looked into this like deeply last night. Like,
I went down a rabbit hole last night. What's it at now?
6.3 million members.
It increased it by another 2 million overnight since yesterday, last time we talked about this.
Yeah.
And so I'm the type of person that I don't do hype investing. That's not me at all. But I'm fascinated by mass psychology. And what's going on right now is just absolutely fascinating because this has never happened in history. So last night I was going down a rabbit hole on this Wall Street. I was going down a rabbit hole last night on this Wall Street Bets Reddit page, just looking at the type of language that these people were using when they were posting. And you'd have, for example, fixed posts up at the top. You'd have fixed posts up at the top that would say something along the lines of, let's rally against the hedge funds, like fuck these guys and these billionaires. We're going to, the retail investors are going to rise up and like fight against them. And it's very much about like a rise of the middle class and lower class up against the upper class and really trying to like fight for rights and freedom. Like it was very interesting the type of language that they were using. And when some of these posts were getting like hundreds of thousands of upvotes on Reddit. And you would see, for example, 140,000 comments, and you'd scroll through the comments of all of this type of language people were using about like, I'm buying in with my life savings. I'm buying in at $100 a share. I'm going to hold until I go bankrupt or until like we fuck the institution.
That is so crazy. That's so crazy, yet so interesting. It's unbelievable. So literally there's a group of people on Reddit, and probably not even Reddit anymore. At this point, I don't think it's just Reddit. So obviously it started on Reddit, but I got to imagine that people are getting behind this so much so that this is going beyond Reddit now, right? Driving this even more. Now, one thing that I can't see happening is long term, I just can't see the hedge funds losing.
Right.
Now, maybe some, but not all. Because at the end of the day, like you just mentioned, they do have the ability to go to their buddies or whoever, these banks or whoever they are, and get these $2.5 billion loans to cover the losses and all this type of stuff, right? So they do have a ton of leverage that they can continue to hold out. And fact of the matter is, if you or I were in that and say we were able to make, say, a quick mill, you going to keep that in? I know these people are talking about keeping it in, but at the end of the day, if you're staring at a $10 million carrot, are you not going to take a few bites off that carrot? Like I would probably. Why wouldn't you? Right? Because I bet you these guys know. Like think about that language on that board. They know they're trying to force people to stay in. I've seen it all on social media. Stay in, stay in, stay in. Fuck everybody. Stay in, stay in, stay in. I gotta think that they're going to be cashing out at some point. Then at that point, what happens? Yeah, the stock comes down. Exactly. So, I mean,
another piece that I find very interesting that you were mentioning that the hedge funds some might lose, but as a whole, they will not lose. Well, just as of yesterday, actually, there was multiple trading platforms. I don't know if you heard about this, but that Robinhood, for example, as one trading platform and TD Ameritrade as another trading platform, actually shut down the ability to buy into a few of these. So we were talking about GameStop in particular, but there's actually 3 other stocks right now that are in the same sort of position where there's massive positions of short sells. And I believe it's BlackBerry, Nokia, and AMC Entertainment, like the theater company.
Remember the call we had for Capital? Remember the woman that was on the call? I don't remember her name, but remember how she was like, oh, today's a great day in the stock market. My BlackBerry stock is increasing. And I'm like, fuck you talking about BlackBerry? It was obviously part of that whole thing. And this was like before this was all popping off.
This is right before it was popping off.
That's so hilarious.
She probably made a lot of money right now because
her friends, she's from the Waterloo area. BlackBerry's from Waterloo.
Yeah.
I'm also, like, I had a bunch of buddies that were in Waterloo as well, and they worked for BlackBerry, right? That's so hilarious. They might even have some BlackBerry stock still.
Like,
This was a days ago.
It was a couple days
Wednesday, Tuesday, maybe Tuesday.
Yeah, I went up to $32 from like 8, 9.
Yeah, exactly. Yeah.
Yeah, quadrupled her money in 4 days.
Yeah, yeah. So that's why she was saying, "Oh, it's a great day. I'm winning in the stock market." I had no idea. That's so funny. Yeah. So basically, these guys, these platforms, these trading platforms, blocked people from buying from buying these stocks,
Which is the first time in history, with the exception. Now you brought this up, so this is the first time in history that trading platforms have actually blocked the ability to purchase stocks, with the exception of
the weed stock. Now I don't. They stopped trading on weed stocks because certain things happened in the market. I'm not going to get into what happened with the weed stocks, but obviously me being in cannabis, I'm kind of like I can kind of understand why that happened. This is so much further above and beyond what happened with the weed stocks. It's not even close.
Right.
This is outrageous to actually have trading companies blocking people from making trades because they're in the pockets of their hedge fund buddies.
Right.
Is like outrageous.
And so there's already multiple class action lawsuits within a few days of this happening that are going against all these trading platforms. And like, there's going to be some people going to jail because of this.
I hope so.
Like, this is totally illegal to just block the retail investor's ability to purchase a stock.
I know. I hope so, because the Reddit guys there, they're not doing anything wrong. They're banding together. That's like me if I wanted to go buy a $1 billion property and I needed 1 billion people to give me $1 each. There's nothing wrong with that. Why is there something wrong with a bunch of people banding together to buy a bunch of stock in a company? There's nothing wrong. So I hope they all go to jail. Mm-hmm. They should. They absolutely should. They're blocking people's ability to make money. Number one, and they're leveraging their power and their abilities to stop losses from their buddies on Wall Street. It's not okay, or even Silicon Valley or whatever. Mm-hmm. You know, and that's not okay. So I'm actually happy this is happening. I'm actually happy they're standing up to people that think that they can control the population. I'm actually really happy that it's happening.
Now, to kind of cycle all the way back to the beginning, and let's say someone were to ask you, "Hey Dan, would you recommend me buying into GameStop?" What would you say to them?
No, not so. My background is not. I am not that comfortable buying stocks. I'm much more a real estate person for investment. And it comes back to fundamentals, like GameStop and all these other companies for the most part. I actually think BlackBerry does have a lot of IP and a lot of their, from especially talking to my buddies that actually work there and everything, there's a lot of actual software, IP that BlackBerry owns. So that might be they might actually have something valuable, but the GameStop brand, they're too late to the table with the online thing. That just goes to show you the incompetence of the people running it. How are you just coming on board online now? And you say, like, when was that they brought the, January 11th, they brought GameStop agrees to 3 new directors? And that's what you're talking about, where they're making the big push? Or this was a couple years ago that they're making a big push for online?
No, this is just, they started doing it a little bit,
push, yeah,
but now the new directors have experience in e-commerce.
Exactly. We're in 2021. 2021.
Yeah.
I started Canadian Protein in 2011. Okay? Like, come on. So no, it lacks every single fundamental that I would ever even look at, not even stock in a business in general. It's not even a question of whether I would advise someone to buy or not buy. I would run as fucking far away from the stock as possible. And now, obviously people are going to, disagree with me because they're going to be devil's advocate and they're going to say, well, look at how many people became millionaires even just because of the stock. Okay, well, number one, you got a bunch of people, you got the mob rule telling everybody you got to stay in, right? Which we both know that's not going to happen. But people are being told to stay in. And the longer they stay in, the longer the higher their chance of them losing everything is, number one. Fundamentally, if you only win in the stock market long term, right? Like we were talking about, rates of return in the stock market, and it averages around 8%. Well, this is an outlier clearly, but these guys would have to stay in for long term. And the stock market, and especially with regards to GameStop, no, it's too risky for me. It's wildly too risky. Even that day, that morning when we came in, the volatility of that stock was outrageous. It was absolutely outrageous. You can clearly tell that this isn't like I don't think smart investors would ever advocate buying something like this. I would have to think that they would.
This is gambling. This is not investing.
Exactly. This is gambling. Yeah, this is gambling, and this is to make a point. This isn't like an investment. Yeah. So no, I would never advise anybody to buy GameStop. Really, none of these, really, to be honest with you. Maybe BlackBerry. I don't know what their IP is, but maybe.
Yeah. Now, you did mention that you're not a stock investor, but you're much more of a real estate investor historically. Yeah. Let's now use this as a segue to start breaking down in a little bit more analysis your viewpoints on why you chose real estate as a form of investment over the last 10 to 15 years, and why you haven't chose to put your money into the stock market to the same extent.
Yeah. So I won't get into why I actually started real estate, but real estate for me is a means of controlling my investment a lot better. Actually made quite a bit more money than 8% year over year in real estate from means of appreciation, renovations, things like that. Now the advantage to real estate is that you can do those things, but it takes a lot more work, like literally putting your money in and clicking a few buttons. Now there's also massive advantages to real estate, such as leverage. I can't go buy $1 million worth of GameStop stock for only $200,000, but I can buy $1 million of real estate for $200,000. Right. So I can do that. Then, if someone wants to be devil's advocate, well, you can go leverage, but you're more than likely, the bank is going to require you to leverage, more than likely being your principal residence and real estate.
Right.
So, there's just, with real estate, there's multiple tax advantages. You can write off almost every single expense that you use even in your life. Gas, utility bill, like you can wrap everything up into real estate and literally leverage all of that type of thing. You can't typically do that if you own a stock portfolio, right? There's recurring cash flow, which would, take the same form of, say, a dividend or whatever. But again, it's still, if you're buying correctly, that potential cash flow can be pretty huge over and above a typical dividend, right? So I guess we should talk about the pros of the stock market if we're going to talk about pros of real estate. Why I got into real estate. So let's talk about why you like the stock market. What are the advantages of the stock market?
The number one advantage, I think, to anyone that's getting into investing is the ease of getting started in the stock market versus getting started into real estate, right? Or the perceived ease, I'll say.
Yeah.
Because with getting started in the stock market, you can save up maybe $500 to $1,000. You can go into any bank, open up a TFSA or RRSP or an equivalent account if you're down in the States. Or you can go to an online broker, for example, like Questrade, and you can open an account through them. It's very easy. You can throw some cash in. You can purchase a stock within probably a week or two, right? So the amount of capital required in order to get started is a lot lower, right? And people always think that getting started into real estate requires like such a substantial amount of capital that's far beyond their reach to get started. So that's why I think a lot of people start flooding into the stock market early on.
Sure. And what a lot of people don't really realize is that it actually doesn't take that much to get into real estate if you do it the smart way, which is what I always advocate to people. You should house hack. And house hacking is simply buying your first principal residence, 5% down, and living in it. Potentially, I always advocate buying, something that needs a little bit of cosmetic work, doing it yourself over the course of a year, moving on to the next property, and you don't incur capital gains taxes on that. Get that property, you increase the value of the property appreciates, especially in Canada right now. If you're playing the real estate market, it's increasing. I think last year, what was the figure? Dave will look it up. The figure that increased year over year, December 20 to or December 2029 to December 2020. It was like an outrageous, like 35% or something like that. It increased.
Well, I know that in the Windsor market in Q4 alone of 2020, it was 17%.
That's insane.
17%.
So right there,
these are record increases.
Yeah, of course.
Right?
Of course they're record increases, but there's certain things that are happening in the market that are forcing this to happen.
Right.
And it's our government essentially. So, with increased immigration, with a lot of so much red tape in development, right? So when you don't have a lot of property coming online, it stresses the supply, and the demand still remains high because of even, just demand locally. And then obviously you have the increase in fluctuations of immigration coming in, creating even more demand. It's just going to skyrocket the value. So this is like, again, the government is trying to tell everyone like, yeah, we're all for affordable housing, but if they're for affordable housing, they wouldn't really be putting these type of things in place to actually perpetuate the outrageous increases in value on real estate.
Right.
So they would either, they would maybe, stop immigration to some extent, or they would reduce the red tape in the, for development, things like that, or, reduce the zoning requirements, stuff like that, and just kind of like let people do a little bit more than what they're ordinarily allowed to do right now, but it's not happening. So,
I think the number one thing that I find interesting about the comparison between real estate investing and stock market is that in stock investing, it's more passive because you don't have any of that active work. Now you can do research on a stock. You can look into a variety of different metrics. You can make smart choices. So, okay, that can be work. But for example, when you're looking at the actual gains that you have from a stock investment, you have the capital gains with the appreciation of that actual stock, and you have dividends if they're available. So you have cash flow every single quarter or every single month, whatever it is, and you have the appreciation. What I find fascinating about the comparison with the real estate investing is that you still have the appreciation of the market based on all the things that you were just saying there, right? And then you still have the cash flow in the terms of rents that are coming in every single month. But in addition to that, you have your forced appreciation, which comes in the terms of equity pay down from your tenant paying down your mortgage every single month, and any work that you do to the property, right? Because that's what I find the most fascinating with real estate as opposed to stock market investing, is that you can actually go in there and you can do work into a property and you can have an increase in value from doing that.
Because you have so much more control.
Right.
So forced appreciation more so comes from, if a property is mismanaged, right? So you're changing the trajectory of the property. You're increasing its value by increasing its income, right? Then you're forcing appreciation by increasing the value of the property, therefore increasing its value. So you're forcing it that way, or a combination of both. I'm sure there's a couple other, reducing expenses, right? Increasing the bottom line would probably force appreciation as well on an income property.
Right. And we're going to get into this a little bit later on. Going to the new business coach with capital.
Yeah.
Right. So you found properties down in the United States, for example, that were excellent properties, that one of the number one driving forces in the decision of selecting property was mismanagement of the property. Is that correct?
Yeah. Mismanagement. One of the things that I actually like a lot right now that I'm looking at is coming from Canada. Number one, it's not easy. It's a little bit more cutthroat. So you have to have like some pretty thick skin to be able to do this type of thing. One of the really interesting ideas that I'm kind of bouncing around right now is looking into properties that need loan assumptions. And the reason why I like that concept is because coming from a country where, in an area, essentially, Southern Ontario, where a lot of people are getting very low single digit cap rates on investment properties, you can go into like the hottest markets, still get a 5, maybe even a 6 cap, maybe say 4 to 6 cap, right? And assume someone's shit loan, but that 6 cap or 5 or 4 cap, whatever, in like literally an A+ location is still a deal, comparatively speaking, to where we are. And the quality of real estate is that much more amazing, really. So it's that's kind of, maybe this is like something for a different conversation, but those are kind of different options that they have over in the US that make it advantageous for people like us that are used to, say, even like seeing a 3 cap with 30 offers on it. You can go down there, get a 5, but you got to assume a shit loan, where in that market, that's available to you, that property, because no one wants to touch it. So it allows low-hanging fruit for people like me to look at it and then bring people in from my circle in on these deals that in say this property, for example, that I'm looking at right now is, let's say, a $20 million property in Dallas. Just from the sheer appreciation that they've actually historically and what they're expecting, that property is going to be worth 30 million in 5 to 7, 8 years. It's going to increase 50%. You know what I mean? So there's massive advantages to that. So it's a very interesting real estate. For me, you have so much more control. You can make a lot of money if you want to be involved. And for me, say, for example, if I were to do that deal, I'd have to bring to the table around $6 million US. I'm so much more willing to take that much money and put it on something real rather than putting it into a stock or the market where I have no control. I don't know where my money's actually going. And let me give you some reference to that. If I give you money and you own a public company and I don't know you personally, I might, for all intents and purposes, for what it's worth and face value, you may seem like a great guy, but there may be things going on in the background that I don't know about, right? And then all of a sudden shit hits the fan, right? Mm-hmm. So if I've got $1 million and I spread my money out in 6 different places at $6 million, and I got $1 million here, $1 million there, $1 million there, am I comfortable blindly giving $1 million to somebody that I don't know? Not really. Especially in a scenario where, it's a GameStop scenario, right? Where the fundamentals like literally do not even exist. Would I be more comfortable giving $1 million to Apple? Yeah, of course. Amazon? Of course. Tesla? Sure. You know what I mean? Even though Tesla is another story, I think it's outrageously expensive right now. However, I think that the people behind those companies and the fundamentals, even though Tesla is lacking a few, those other companies, Apple especially, the fundamentals are there, right? Nonetheless, I feel much more comfortable putting my money, and especially that much money, on something that even if shit hits the fucking fan to the fullest, there's still a property there and there's still people that need to live in it and people still need a roof over their head. Done. People don't have to own stock. It's a basic need for people to have a roof over their head. That's it. So that's why for me, I am much more a real estate investor rather than a speculative stock investor. I like to use the word speculative because at the end of the day, you can do all the due diligence that you want. It's still, to some extent speculative. Mm-hmm. Whereas for me, with regards to the real estate market, I'll go into certain, cities and I'll look at specific properties and I'll speculate where that property is going to be in 5 years. But at the end of the day, I don't based off speculation. And that's what a lot of people do in the stock market. They buy it based off the fact that that property is going to appreciate. I don't buy property that is based on appreciation. I buy whether or not that property makes money, and that is it. Right. And I don't think people would buy stock if only for the dividend. Does that make sense?
Yes. That you're buying for the monthly cash flow and the rent.
That's it.
Exactly.
So I buy real estate based off the monthly cash flow and based off the equity pay down. That is it. Mm-hmm. And any appreciation moving forward is bonus. That's the only reason why. That's what I'm used to. That's why I've done very well in the real estate market. And some people have gotten crushed is because I'm used to investing that way because I started in the 2008 crash.
Right.
So you could only buy based off of cash flow and equity pay down. That is it. There was no appreciation on any real estate for literally probably 7 years.
Which is very interesting, and that will tie into people looking to buy real estate, let's say their first property or maybe one of their first few properties, even today, where you were saying that you're able to make these deals work based on no assumption of appreciation. Mm-hmm. Let's say that right now, hypothetically, we're at the top of a market of a 10-year cycle,
Yeah.
right? That we're not going to see any more appreciation over the next couple of years.
Yeah.
That it's still possible to buy real estate the right way, where it's cash flow positive and you're going to have that equity pay down, even with appreciation over the next maybe 3 years, for example.
Yeah, for sure. Absolutely. I totally agree. For me, that's the only way to buy real estate. I would never buy real estate any other way. Because if something does happen, you don't get that appreciation, which could very well happen. What are you going to do then? What if it goes down in value, right? You still need a property that makes money to carry you through that time. And if it doesn't make money from when you bought it, it's not going to make money if it starts, the value starts to tank. What are you going to do then? The value starts to tank, the rents come down, people leave, right? Housing becomes more affordable. The rental market gets squeezed a bit. So what are you going to do? You have to buy property that makes money from the get-go, and not that's happening in the Toronto market right now, right? Is people bought speculative pre-construction condos.
Right.
And what happened?
Micros specifically are getting absolutely crushed.
They're getting crushed because of this whole thing. I'm sure it'll come back just because of the sheer population of Toronto. And how long will it take though? I don't know. With this whole work from home thing, Toronto's getting killed right now. The properties dipped. How much did the properties dip? Dave, how much property values dip in Toronto in the last year? Come back to that, but that's probably got to be a really interesting number.
I know the micro condos, which is basically less than 500 square feet. That's a small, if you're thinking of 500 square feet.
Yeah.
I believe that they dropped by about 25%.
It's huge.
Year over year for the micro condos.
Yeah.
Yeah.
It's 100,
Dave will have to double check.
$125,000.
Yeah.
Right? Because what do they go for? Probably close to $500,000. 300.
You could
400.
In February of 2020, you could not find a single micro condo less than $600,000.
Oh my God.
So the cheapest one was $600,000, and then throughout the pandemic, they just kept on going lower and lower and lower and lower because they weren't buying them at those prices.
Because everybody's working from home. They don't have to stay in the big city, right? So
right.
That's why another thing that I'm looking to for Coachwood Capital too for property is I'm only going to places in the U.S. that have remained open. I'm not going to cities and stuff and in areas that were heavy lockdown, things like that, where the job market in those areas did not get crushed. So they're still alive and well,
right?
So that's one of the things that I'm looking for when I go down there too, and I'm only doing deals in those areas essentially. So, thanks for tuning in to the Pull the Trigger podcast. Follow me on social media platforms at Lambo Lapdog. You can listen to this podcast on all major platforms. This podcast was brought to you by Canadian Protein, Canada's favorite protein and supplements. And Coachwood Capital, passive real estate investing made simple.
I want to kind of tie this all together by asking you a question, Dan, of that if you were, let's say, 20 years old or 18 years old and you were just starting to work and you were just starting to put money aside for savings, what would you do right now if you were 18, 20 years old, whatever, and you're starting to save some money and you have some disposable income to start thinking about what would your plan be, knowing what you know now?
I would do literally nothing different than what I did. I would save all my money that I could, and I would wait for an opportunity to come by for either real estate or starting my own business. I would not. Even at that stage in my life, in the beginning, I look back, I would not invest in the stock market at all.
Do you think people are too impatient?
Yes, absolutely. I think social media has significantly accelerated the impatience of young adults because they see, I'm guilty of it too, I guess, to some extent, but they see, say, my cars or what other people have, the nice houses, the watches and all this type of shit, and they want it. And some people at their age might have it. That's an outlier for example right now. And the work that it takes to get to that point legitimately and not have it given to them and not have it, not have somebody like legitimately, not legitimately, but not having somebody actually like front it online, like where they don't actually own it. To actually own that type of stuff takes a lot of income. It takes a lot of dedication. It takes a lot of sacrifice. It takes a lot to actually get to the point where you can go out and buy these cars, and you can go out and buy Rolexes and you can go out and actually own a house like what you see online or whatever. The amount of dedication, the amount of sacrifice, the amount of hard work that it takes to get to that point is dramatic. I almost don't recommend it for people because of what I've actually had to endure to get there. Like I've almost, like I have told you before, like I've had like anxiety attacks. You know what I mean? Like it's been legit. Like it's been real. Like it's been a struggle. And, I think a lot of people don't actually realize that. And I think if they actually were able and capable of actually seeing to actually experience what somebody, not even just in my shoes, anybody that owns a business, especially right now where businesses are getting crushed.
Yeah.
If anybody were to understand and like get like a glimpse of the emotions and the fear and the things that they have to go through, I think 99.9% of the people wouldn't do it. Or they wouldn't even be capable of doing it. So, would I change what I've done? No, I wouldn't, because what I did in the beginning, the amount of sacrifice that I put forth, the amount of hard work that I put forth, the fact that I saved and worked my ass off from my first job when I was 8 years old, delivering papers, and I saved all that money until I got an opportunity to buy my first package of real estate, set me on the trajectory to where I am today. So if somebody were to ask me, I would do different in my life in the beginning, I would do nothing different, because it's that package of real estate that put me on the right path. And it was the hard work that got me that first package of real estate. And it was the ability to leverage the equity that I forced and built through renovations and proper management in that real estate that got me the money to start my nutritional company through an equity pull out or an equity takeout from the condos that I forced depreciation on. I would do nothing different. It was a best case scenario. And I always was told, from my mom in particular, and my grandmother, my mom, they grew up, very poor. And they would always tell me, keep my money in the bank and save as much money as I could. And I remember growing up, okay. But I had a different mindset where I'm going to save as much money as I can, and I'm not going to let it just sit there. I'm going to put it to work. And that's what I did, and I wouldn't change a thing.
A quote that I love is that, now I forget where I heard this, but many people substantially overestimate what they can accomplish in 1 year time and substantially underestimate what they can do in 10 years time. Right. And let's say, for example, that you set a goal for yourself that you're going to, for example, I got a request the other day being like, I want to start a business and I want to get going and I want to be profitable in 30 days. I'm like, Kate, that's fantastic. I love that goal. Ordering your containers will take 3 months. So I love your goal here, but it's unrealistic. Right. And that's just one small example.
You got this on Synergy?
Yeah, I got this on Synergy. Okay. And I see this all the time, the impatience, right? And, or even, for example, just on social media or amongst my friend group or whatever it is, the impatience and these and the reason why I'm saying this is I was a complete victim of this before in the past too. And what happened was I was setting such extreme goals and putting such pressures on myself that when I was not attaining those things, I was then feeling unfulfilled because I was failing at not accomplishing these lofty goals. And because I was feeling like a failure, I was spending money on shit to look like I was a success to try to meet those goals of what I set for myself.
And it's those, and it's those things that you're buying to try to,
put on that image in that front.
Put on that image that you're literally going to set yourself back.
Right.
You're gonna like literally hold yourself back from accomplishing those goals.
Like when I finished university, I had student debt and everything, and I got into work and I started a job, but I also got a brand new Jeep. Yeah. Like there's no reason why I should have got a brand new Jeep, but I was trying to portray a certain image of success that I set for myself, being like, I should be a person that's able to afford a Jeep. Now, so I'm going to go and I'm going to get a Jeep.
It's tough. It's literally tough when you are inundated nonstop with social media and the highlights of everyone's life.
Mm-hmm.
I totally get it, man. I get caught up too. I'm like, fuck, man, look at that new Lamborghini, man. Wouldn't I like that? But like, at the end of the day, how is that going to get me closer to the goals that I want in life?
Right.
It's not. It's going to set me back. Right. So I totally get it. And I sympathize with people that are, constantly getting that shit shoved in their face. They have to like themselves out of that and look at it objectively and think, if I fall victim to this, is it going to help me or is it going to hold me back? Right. So they have to really look at it through a different lens. Unfortunately, the lens that a lot of people look at it is just the wrong one.
Yeah.
Honestly, I'm surprised that honestly didn't happen earlier. Decline.
So I think for anyone that's following your journey, for example, and that's motivated by your journey and wants to try to start their own business or start investing into real estate or whatever it is, I think you can apply a lot of the same principles of what you did early on at literally whatever age that they are.
Now, here's the interesting factor here. Okay. Yes, I started super young, but we're talking making what? I was literally delivering papers.
Making $5-6 an hour?
Not even.
Yeah.
You know what I mean? So yeah, and it would only take me like 2 hours. I was making like what, $10 a day? I'm talking about I had a long-term vision even when I was that young. Okay. I didn't know what I wanted to do. So for your argument here is like people need to look back and extend that vision out. This is a marathon. It's not a sprint. So even though I was looking at, even though I was starting so young, what people need to understand is even if they're in their early 20s, late 20s, 30s, it doesn't matter. At the end of the day, if you're responsible with your money and you just take a year, 2 years, 3 years to be responsible, you're going to be able to, take that money and use it to get ahead in life. Whether it's buying your first investment property, whether it's starting a business, maybe something comes up,
right?
Maybe you want to buy a blue chip stock. I don't know. But at the end of the day, my analogy of how early I started is testament of not necessarily looking only at starting ultra young. It's even if you're 30 and you have a job, to bankroll your investment goals, your business goals, whatever. People seem to look at their careers or jobs or whatever in a very negative way. People need to kind of reframe their ideas about what they're doing at their job. They need to stop hating job so much. They almost need to kind of look at their job and think, hey, you know what? This job, I need this job and I want this job because it's helping me bankroll my goals.
Right.
And they need to open that up.
That.
What's that?
I like that.
Yeah. They need to open it up a little bit more because think about it. If you quit your job and I want to be a real estate investor, you quit your job. What are you going to do? Where's that money come from? You need money.
Also, the bank's going to look at you for that mortgage application and laugh at you.
It's actually in your best interest to hold your job, buy your first couple rental properties in your personal name so that you can leverage your income from your job. It makes the most sense. So, again, people need to, I don't want people to think that because they didn't start young enough, they don't have a chance in hell at becoming successful. That's not the case. What they need to do is they just need to, they need to lengthen their goal timeline, right? And then they need to kind of, I guess, look at whatever situation they have, whether it's, the career that they don't like or the job that they don't like, they need to leverage that. However low income you have, whatever, if it's a high income, low income, it doesn't really matter. They need to leverage that and use that to accomplish their goals.
And I think some people underestimate how much they can do. Let's say, for example, they're making whatever, like the average wage in Canada, whatever that is, and they're driving a leased car. I know we were talking about this example the other day, that the average lease payment for a car in Canada right now is like $500, give or take, right? And if you think about, and like that's what I was paying when I was when I had a car right when I graduated, right? $500 a month. And you don't realize that if you just took that money, for example, and go and just get that car that you really shouldn't be affording. If your priority is to have a nice car and you don't really care about investing, okay, by all means, whatever, go and do it. But if you actually have these investing goals and you look at that $500 a month car payment and you extrapolate that over the course of 1 year, that's $6,000. And let's say that you had a 3-year timeline and you just saved that money, that'd be $18,000 that you'd have saved up. That then, let's say that you haven't purchased a property yet. Yeah. You could get a $300,000 home with 5% down, first time home buyer advantage, 5% down, that's $15K, $3,000 in closing costs. In 3 years, you could have your first rental property.
Yeah, exactly. Okay, so let's bring another example. So people love fucking Starbucks, right? Maybe you don't need Starbucks every day. You buy a Starbucks every day for 3 years, you're $5,500 at $5 a pop.
There you go.
And some of those are not even $5, right? Are they not more expensive too even?
No, you can get $8, $9.
Yeah, I don't buy that shit. Like, I still don't buy that shit. But like every day, like for 3 years, you're $5,500. Call it $6,000.
Mm-hmm.
Like that's outrageous. So just, a responsible, buy a beater. I drove a beater for years while I was building my businesses. Years. It was a fucking 99 Ford Windstar van.
Mm-hmm.
You know what I mean? So that I didn't have a payment, so I could keep rolling back my money into whatever I needed to do.
I think people would find it very interesting. Like, how long did you own that van up until, like, what was your financial situation with business, with real estate, etc., with still owning that van?
Yeah. So, okay. So I was legitimately a millionaire. Number one, when I owned it, I probably had this $7 million in real estate at that point, and I had that van.
Yeah.
And I would the nutritional company was at least, maybe $5 million, doing $5 million a year in sales. Like, you know what I mean? And it was literally like I would have to park that van. I would literally have to park that van on the road because it was staining my driveway with rust when it would rain.
Mm-hmm.
That's like legit. So I think people are just unwilling to sacrifices because, they want to look cool.
Now you probably had temptations, right? You probably had it all the time where you were like, oh, I have my first few rental properties.
Mm-hmm.
I have a few $100,000 in real estate. I have $1 million in real estate.
Yeah.
My nutritional business is profitable, making a few $100,000. You probably thought, oh, I could probably afford a nice car now.
Yeah.
Like, did you have that thought at that time? Yeah.
But for me, I owned the van because I would have to bring appliances. I'd have to bring tools. I'd have to bring paint. So I didn't have any seats in the van. Right. So I had the 2 front seats and maybe a bench seat in the back if I wanted to, if somebody had to come in the car or whatever. But I legitimately used that van as a work tool.
Mm-hmm.
It was a workhorse for me, and I didn't care. I knew that van was furthering my goals, and my goals were more important than me looking cool or having a nice ride or whatever. And if somebody didn't like that, then I'm okay with it because it helped me get to where I am now, and I'm totally fine with that.
Just circle back to the very beginning. GameStop stock then is, don't worry about these 1-2 days of hyperinflation of this stock. Like, extend your goal timeline, really prioritize what's important to you. Any other final remarks?
Yeah, I totally agree with you. People need to not get caught up in the hype. They need to back up and look a little further out onto, where do I want to be in, say, 10 years rather than in 1 year, right? You don't want to get into a position where you're getting, off your game because you're not accomplishing these outrageous goals that you're setting for yourself within 1 year.
Mm-hmm.
Take a step back. Don't get caught up in the hype. Don't get caught up in social media. Stick to your goals. Do something little by little every day. Do something every single day that will help you accomplish your goals for the long term. Thanks for tuning in to the Pull the Trigger podcast. Follow me on social media platforms at Lambo Lapdog. You can listen to this podcast on all major platforms. This podcast was brought to you by Canadian Protein, Canada's favorite protein and supplements. And Coachwood Capital, passive real estate investing made simple.